The Consumer Price Index, CPI, a read on inflation, those prices that you pay at the pump and at the grocery store, came in high for April at 8.3%, but that's not as high as the 8.5% in March. The hope is that inflation just might be peaking. Let's bring in Joe Tigay of Equity Arm Investments. And Joe, will that high inflation read, though, hold down the stock market?
Well, there was a saying a few years ago, maybe you've heard of it, when the Fed was keeping interest rates low. It was, don't fight the Fed. And the Fed kept interest rates low. That allowed money to flood into the system, and that money really propelled the stock market higher. Now, right now, with inflation really high and the Fed looking at the range of possibilities is either we're going to have a recession or we're going to have stagflation. And I think they're going to choose to get inflation down to avoid the worst of all outcomes, that they're going to have to raise rates and they're going to have to reduce the money supply. And we should just look at the inflation numbers and say, well, let's not fight the Fed. Economic conditions will be tighter, and typically that leads to a harder path for equity prices to go higher.
What are your thoughts on Bitcoin? A report shows that 40% of investors in that crypto are now taking a loss.
Well, Bitcoin has been a risk asset for some time now, and with all risk coming off, it's not surprising that Bitcoin be moving with it. It does fight the narrative of people saying, well, the market will eventually go to Bitcoin when times are tough. You're going to want more Bitcoin. However, when with a little bit less printing of money, maybe it does say, well, we don't need as much digital gold because real dollars will be worth more.
Thank you for your Trader Talk, Joe.
Thanks for having me.
Go to businessfirstam.com for where to see our show on TV.